This really could be the end of the Bed Bath Beyond rally now. Hi again everyone, hope you're all doing really well. So I want to talk about a recent development in the world of retail, specifically the story of Bed Bath Beyond, ticker symbol BBBY. As many of you know, the company recently missed a $25 million interest payment on its debt and is facing the real possibility of bankruptcy. In an attempt to avoid this, Bed Bath Beyond has just announced a plan to raise as much as $1 billion through the sale of convertible shares and warrants. Now, with a current market cap of about $350 million, this is a significant move for the company and could have far-reaching consequences for its future. But let's take a look at the details of the plan. Bed Bath Beyond will sell over 23,000 shares of its Series A convertible preferred stock for an upfront payment of $225 million. It will also sell warrants that will allow investors to purchase more than 84,000 shares of convertible preferred stock and $95 million of common stock in the future, raising an additional $800 million. This, combined with a $100 million credit line from one of its lenders, will allow the company to repay some of its debt and hopefully avoid the immediate payment of its entire $1.03 billion in debt that it carries on its books at the moment, as would be the case if they do file bankruptcy. The money from the sale of warrants will go towards turning around its operations, which aren't going that well anyway. So what does this all mean for investors? Well, as a meme stock, Bed Bath Beyond is a heavily shorted stock, and its share price has been heavily influenced by coordinating buying efforts by retail investors of late. The stock lost almost half of its value after the announcement, despite the company's attempt to avoid insolvency. So while this is good for the company longer term, it's not good for those holding the common stock. The warrants issued by Bed Bath Beyond that convert to preferred stock may appeal to some investors as they can offer guaranteed returns in the form of dividends. However, this also presents risk as the new securities would rank below the company's debt, meaning that in the event of bankruptcy or liquidation, preferred stock will only be honoured after all debt is cleared. Another factor to consider is dilution. This sale will significantly dilute the stake held by the company's existing shareholders, and with the number of shares available in the market set to rise, the company expects the share price to fall in general. This has led some analysts to remain skeptical that the retailer can raise the cash it needs to repay its debt, because generally a lot of people aren't going to necessarily want to touch this company. I'm personally still staying clear of it, and I don't want to advise you guys what to do, but I think you guys should be too. Anyway, in conclusion, while this move by Bed Bath Beyond may help the company avoid bankruptcy in the short term and repay some of its debt, it also presents significant risk and uncertainty for investors. Even those looking to take up these new securities, there's no guarantee that Bed Bath Beyond is going to be able to honour the dividends for these preferred stock. With a current market cap of $350 million and a highly dilutive offering of preferred stock, the future of the company and its share price remains really uncertain. Time will tell how this development will play out, but one thing is for certain, it's worth keeping an eye on. Anyway, let me know your thoughts on Bed Bath Beyond stock. Are you disappointed by this avenue of going through an equity raise, or are you happy that the company is still going to be around for some time to come and not going straight into that avenue of bankruptcy? Let me know your thoughts in the comments below. Until next time, everyone, may the markets trade in your favour. Cheers.